Starting with gold, and we'll come down through to these major currencies. Gold on this weekly chart, as you can see, it's being held up in this bearish area on the chart. That's the weekly chart there, and it's had a strong drop last week. On the daily chart, this M formation failed to pull the price up into the neckline, and instead on Friday we got that strong move to the downside, and we've come into this supporting area here where the bullish impulse originated from. So down in here could be regarded as a support area, target area, demand area, however you want to call that, order block. So that could be the focus for the days ahead, a move lower. On this 4-hour chart, there's a fair bit of displacement out of this area up here. This price has dropped down heavily, consolidating. Whether or not that's a sign that we're going to continue lower into that support area, or whether we need to see a correction before coming lower. So on the 4-hour chart, for the meantime, these are the areas. Potential resistance in here, up here, we're sort of trapped within this box, and then that's the supply area, the demand area to the downside that the price could be heading towards. But like I said, we might need to move up into supply over here, 1950, 1960. If we're not just going to see a drop down towards a test of 1900 there. It's quite a wide and catchment area to the downside, and that will be mitigating all of that impulse from the origin. So longs coming down into longs. So a long squeeze could be on the cards. Now, it's worth noting that on Thursday, the market closed bullish, but on Friday, well, it made a lower low on the Thursday and a lower high, but it still closed bullish in compared to a series of lower closes earlier in the week. Now, instead of continuing going up in line with that bullish correction, it in fact just melted and it printed a fresh low for the week, and that is where the price currently is hovering above. So Friday's low. So it's worth noting that we're just above Friday's low, and there could be prospects of a continuation to the downside. If we break Friday's low, that may be the catalyst for higher time frame traders coming in, pushing the price lower. So this could be regarded as a day 3 continuation day, or this could be, given that Thursday was a failed break to the upside, so day 1 shorts coming in, day 2 shorts, day 3 continuation, or it could be a day 1, day 2, and a day 3 correction to start us off for the week, pulling back into those shorts. So to sum it up, the key levels are Friday's close, Friday's low, about 1933, the closing price, around about 1938, and the high of Friday, which is round about that top of that box there, just over here, market red for potential resistance, 1960. So those are the 3 key levels, and I'd be looking for a setup to trade from either one of those. So if it looks as though we're coming down, then I'd want to be selling from the closing price for a short. So we could be in a scenario where we break the low, we come back up, the closing price acts as resistance, and we see some bearish structure to short from. Or on the other hand, we could break up. We may even break the lows, come right back up through the closing price and make a foundation on the closing price to target a move higher from the closing price. Or it may be that we come into the low of Friday and we get plenty of signals and then perhaps we break the closing price and we come back down into the low of the day, and perhaps that could be the setup to go long.